I'm Layne. This is Anthony.
So Layne's mortgage broker with
Axiom. Yeah, so I'm a mortgage broker with Axiom. I've been investing for, I think, 18 years, a mortgage broker for 17. I've got 17 properties right now. Mainly, I'm buy and hold, kind of biased towards that. I often talk to people out of flipping, other types of real estate investments, and except right now I'm also doing a flip. So exceptions to all rules, and that's kind of one of the things that we'll be talking about tonight. I'm going to take one side of the argument, and often I have these same conversations with my clients, so we're going to have it as a bit of a conversation, and it doesn't necessarily mean that it's never a good idea. We're going to be discussing buying a fourplex versus single family home with a basement suite in terms of investment strategy. I'm going to take the argument that single family home is better. I like to compare everything to that, but there are also circumstances or exceptions or different market timing or just an opportunity that comes to you that might be worthwhile to actually do those things. So I'm still going to take the argument, and more so because I want everybody to think through all of their options. And then,
so we'll essentially be comparing, should you buy 2 single family homes with suites, right, which would be 4 units, or 1 fourplex? And like Layne was saying, there's no real right or wrong answers, but there is a right answer for the investor that you are, right? Like for your goals.
Yeah.
Because they are a bit different assets. There's pros and cons to both of them. Also, I want to mention before we get more into that, this is a new style of event we're doing, right? We used to do only networking. Now we're doing a bit of presentation. We'd love to have everyone's feedback, right? Whether it be great or not great. If we suck, we want to know about it as well. So just tell us so we can adjust. Like, our goal here is to provide as much value and make it an enjoyable event. So if you guys don't like this, we'll change it.
And we started as a meetup, but we really want to keep it a meetup that we're just adding a short presentation on. So everyone's here from 3 to 4 hours. The presentation is typically, I think last time was probably as long as we'll go, and that
like the hour is probably as far as we want to go.
Yeah, so we still want to add a little something for everybody to think about and just get everybody talking, but at the same time, we really want to focus on, getting it's really still a meetup just to exchange ideas and bounce ideas off each other. So, and
just so everyone knows, by the way, when we're done, we're taking all the chairs away, so you want to force you to move around. Meet some people. So don't get too comfortable. It's temporary. So let's get started. So again, like we said, we'll take the argument of both sides, work you through the process that we be approaching this. Layne's going to be taking the argument of a single family house, so you can get started on that.
Yeah, so and it's a question I get asked a lot. Why not just go right to a fourplex? Including actually a number of people asked me that after the last presentation. For some reason, it just ended up coming up as a topic. So we're gonna do a thought experiment with making the assumption that, and it might be off a little bit on numbers, market rents, that kind of thing. Don't get caught up in what you could get right now.
The specifics don't matter. The idea.
I'll try and get as close as I can, though. But let's just assume that you've got an option of buying. You come to me and say, "Hey, I've got this $1.2 million fourplex, and here's the ROI on it." This is the reminder to tell everybody to turn off their phones and alarms and everything else. So, make sure mine's actually off. So we'll make an assumption. You got a $1.2 million fourplex, and the ROI is X. And my first argument would be, okay, well, how does that compare to buying 2 single-family homes with basement suites? So let's make the assumption that you've got 2 $600,000 houses with legalized basement suites in Highland Park, for example, or a neighborhood, wherever it happens to be that you can get a decent $600,000 property. So let's make the argument that rents are actually the same. I think probably rent out a single family house main floor for more than a half duplex main floor. But for the sake of argument, we'll leave that part of it out just because it convolutes the issue a little bit. What I like about a single family house is you simply have more options with it. You own 2 single family houses with basement suites, you're getting the same cash flow, but let's say, for example, you need to sell. So maybe you need to sell because the market's turned, maybe you need to sell, you need the money for something else, or you have another opportunity you want to sell. It's a lot easier to sell a single family home. Now you can sell it to, a family that wants to live in it and they have no intention of renting out the suite separately, or a family with a mother-in-law they want downstairs, or a family that wants a mortgage helper, or another investor. Now, if you're selling a fourplex, you have one option. It's an investor. Nobody's buying a fourplex to live in unless they also happen to be investor-minded. But that's quite rare. I don't know that I've ever had somebody.
Yeah, not a very typical
Yeah,
scenario.
it's not a very typical scenario. In 17 years working predominantly with investors, I don't think I've ever had a scenario where somebody actually bought into a fourplex, unless they were very young, starting out early. Like I've seen people talk about, I still don't think I actually had someone close on it. Yeah, it just doesn't make sense. So you've got basically one market to sell to. So if there's a market downturn, it might be really hard to sell that. If you are selling a fourplex or any kind of specialized property.
That's kind of the flip side on the fourplex though, right? Is that, yes, you've got less flexibility as you mentioned. However, first you can scale faster, right? Because you're buying 4 units at once instead of having to get
2, yeah.
To buy 2. The other thing too is in a market downturn, if it is a crash that's mainly caused by speculation, like we've seen in some other markets in the East, right? Those assets tend to be more stable in that kind of downturn, right? Because there's always renters that. So if the fundamentals of the market are strong, economic fundamentals, jobs, things like that, the fourplex will keep doing well, where the single family will tend to be more volatile. But on the flip side, like Layne mentioned,
yeah,
if you have a downturn where it's a fundamental downturn, right? Like we had in the past in Alberta, right? Like our last downturn was not caused by speculation. A single family gives you a lot more options to sell it out.
Yeah,
and you can sell one of the two.
Yeah, you could sell one. You're not forced to sell one. And if in a downturn, if you have a house that anybody can buy and there are thousands of people looking for a house similar to that, you drop the price 5%, it sells the next day. You have a fourplex, drop the price 5%, unless there's somebody looking for a fourplex, doesn't matter. So you might end up you might be forced to take a worse of a deal.
Yes, yeah.
Yeah, and for this sake, like if right now it's pretty reasonable to say 1.2 for a pretty nice, reasonably decent renovated fourplex, but if you and $600,000 is also a decent price for a decent neighborhood and with a legalized suite. If that adjusts to $950 for a single family house, but the fourplex is still 1.2, well then we're not really apples to apples anymore because you can't buy one per. But right now the market lines up that you're going to purchase about the same amount. So again, more flexibility. It takes the same capital. If your restriction is you're bumping into too many mortgages to buy more single-family houses, then what Anthony said, with one fourplex is one mortgage versus 2, that can actually impact you. Usually people run out of qualifying capacity income-wise and down payment prior to that, but depends. Once you scale up and you become a bigger investor, fourplexes are, as Anthony mentioned, good. Because
that's the interesting part, right? Is the fourplex you need to qualify income-wise for the whole 1.2 million. Like obviously you've got rent stuff as part of that, but it's still a lot harder to qualify for that than qualifying for $600,000 mortgage. And for a lot of the newer investors in the room, like Layne was saying, the number of mortgages is not usually your hurdle. It's the qualifying, right? Like it's the income to keep buying more. So getting the next house is easier than getting the next fourplex, right? Especially there are lenders that can go quite a lot of mortgages, right? So you can go over 10 in some cases.
Yeah.
So that usually becomes more of the limitation. Now, if you've got $10 million to invest and you want to buy between a house and fourplex, you're going to be buying fourplexes, right? Because that's the way to maximize your amount of capital.
Yeah. One of the other things is that when you move into the plex market at all, you're competing with a different type of investor. You're competing with old money or trust money. And that kind of money isn't like for I think most of the people in this room, and certainly me, I didn't inherit a bunch of money. I got to make my money. I want to make money on my money. When you look at capital preservation for wealthy families or even in a trust, like some parent wants to leave their kids money, but they want to put it in a trust. They like real estate as part of that portfolio, but they don't like single family houses. That's too hard to manage. So now you're competing with money that doesn't need to make as much money. So they're willing to mess with cap rates by putting 40% down, 45% down. They want to, preservation of capital is almost as important as making money. So you're competing with a different type of buyer. So once you get into plexes, sometimes there's not as much opportunity.
And here's the interesting thing. The cap rate valuation technically starts at 5 units, right? Fourplexes are valued based on comparables, but because they're so close to it, people would put a certain amount of value on the income as well. And because the cap rates are so bad, and I mean, in Calgary, they're better than other markets, but they're still bad considering the interest rates we have, the fourplex become the next best thing that can have a decent cap rate going in, right? So now you're competing against a lot more money, sophisticated investors that will throw in unconditional offers, will be willing to overpay a lot more than you. So it's really hard as a newer investor to compete in that space, at least in this current market in Calgary, right? Like there's other markets where that's not the case, but right now it's very difficult. On the flip side though, and that's something we can talk about for both these property type, is if you're going to do a flip, it's going to be a very different flip, especially right now in our market, because we already have, we don't have a lot of fourplex inventory right now. There's very few in Calgary. It's very hard to buy, especially the renovated ones. So if you're buying a duplex and you're converting it into a fourplex, if you're buying a rundown fourplex and looking at doing a renovation on it, you'll have a pretty large spread, and you're going to be in a hot market on the sell. Where with a single family house right now, it's very hard to buy, like the cheap ones, right? The market is hot. But the luxury market is not that hot right now. Like once you try to sell that house, it's not that easy. Where with the fourplex, you're going to be hot on the way in and on the way out. So at least it reduces your risk a little bit. And if the market shifts, you can hold on to that property and it should cash flow, right? If you've done your flip right, it's going to be a performing properity.
Yeah, you're flipping a fourplex. You're not flipping it out for somebody to live in. So you're not going to get carried away with fancy stuff. You're renovating it to be attractive to another investor. So even if you're flipping, you're renovating it to be attractive to an investor. So yeah, if you get stuck with it, okay, you rent it out. That works too. You don't collapse if you're flipping, but try to do it in the luxury market and the market turns. Yeah, you're eating a loss. There's no trying to rent that out for what your costs are into it.
And the truth is the flips in single family houses that are more investor focused, right? Like adding suites and things like that, they're more of like a burst strategy, because a lot of times you're not getting a super high ROI on these kind of renovations. You'll get your money back, maybe a little more, but it's not a super large spread. Where usually the larger spread on single family is when you're transforming that property, right? Taking it from a shitty property into like something that someone really wants to live in. Well, those usually don't cash flow, right? At the price range that you are in a sell, you're not going to be able to cash flow. So again, very different property type if you're planning on flipping.
Or if you get stuck in a downturn, and it's not as much of an exit strategy. So the main thing though I like about two single family houses versus a fourplex is they're both on the same lot, usually a 6,000 square foot lot. Fourplex is on a 6,000 square foot lot, and single family house is on a 6,000 square foot lot, but you buy two of them for the same price. Land is the part of real estate that appreciates. In fact, on your tax return, the government agrees. You can depreciate the value of your building. You write it off every year because it's going down in value. So the part of real estate that goes up is land.
Adjusted for inflation, right? Like your building, yes, will go up in value, but once you adjust for inflation, the building's actually depreciating.
Yeah, or the land is increasing at a fast enough pace that it overshoots how much the building is depreciating, is how that actually works. I mean, you can look in the neighborhoods where someone's tearing down an old house. Highland Park, for example, someone buys a $600,000 house, and then they tear it down because it's worth $600,000 to them as an empty lot.
The building value is essentially at zero at that point.
Zero, or to a builder, negative $20,000 for the disposal cost, depending on if there's asbestos in it. So that's the way it's actually valued. But that's exactly the next point is so let's say you buy a $1.2 million fourplex right now, or you buy it, compared to two $600,000 up-down duplexes. Again, let's assume same rent, everything else. Let's say the market does really well in the next few years and then bumps up whatever percent, and then the infills are now, or semi-detached are now selling for $1 million a side in, Killarney or wherever it is that you bought these comparative properties. So now a builder's going to knock on your door and say, hey, can I buy your $600,000 house? But they're going to offer you $8 million because they're selling it $1 million minus their building costs, minus the margin they want to make. That's how much they can pay for the land. So if the end sale is worth that much more, it's not unreasonable to expect that they'd be willing to offer you $800,000 for the same property. So you're going to get that times two. So you made $400,000. Let's say you buy the Fourplex instead. Are they going to knock on your door and say, hey, can I buy your $1.2 million? I can pay $800,000 for it. It's like, well, no, that doesn't make any sense. You're losing $400,000 in that scenario. So the same scenario, the same redevelopment, just has a significantly bigger upside because you own more land, because the land is the part that's appreciated in that scenario.
Well, that's an important topic to bring up, because if you're going to be holding for the very long term, right? Well, depending which neighborhood you are, right? The Fourplex is often already the highest and best use of that lot.
It is, yeah.
In most cases, unless you're in like a very high density lot. In a lot of cases, you're already the highest and best use, right? So what's your best case scenario on a very long time hold? Well, you might renovate that building, you might tear it down and build another Fourplex, right? However, in a single family house, especially if you're on, a good plot of land, that's usually not the highest and best use over the very long term, right? Because as the city grows, as the density increases, usually the Fourplexes there, or maybe some stacked townhouses or some small apartment buildings, will be worth more than the house is. So over time, even though your building now has lost a lot of value, your land has increased significantly if you can change the use of that land, right? So it's a very different outcome.
Yeah, I mean, the lots are identical. It's very hard to. It'll take a long time for inflation and increased values to make up for the extra $600,000 you paid for the. If we're just looking at now the land value of it. So it's going to be a Fourplex for the foreseeable future. Again, unless you get it next to higher density stuff, pretty close to a belt line or edge of downtown, still might be a good holding opportunity for somebody that knows there's other properties that could be, an apartment building can go on or something. But for the most part, for what most of us will be looking at, we're looking at, the outskirts of inner city for what we're looking at, where infills are being built, or, they're tearing down houses and building semi-detached. And that's where, again, it's not unreasonable to expect that in, a 5-year time horizon, you could be selling those $600,000 houses to a builder willing to pay you significantly more than you bought those lots for. Whereas if you're doing that, it's a Fourplex is going to be a Fourplex for a long time.
Yeah, that's essentially the gist of it, right? Now, management-wise, you've got pros and cons there as well, right? Because the Fourplex has ease of management, right? Your 4 tenants are in the same building. Those units are usually fairly identical. At least both sides will be the same, right? So when you're doing renos, less management to do there. When you're managing tenants, less management, one building, right? However, the tenant demographic will usually be different, right? If you've got a brand new Fourplex, you'll still attract good tenant. You'll be able to attract good tenants, but they're not going to have as large of a yard. They're not going to have the same pride of ownership.
Parking's going to be a little more restrictive, so
exactly,
you're going to have to restrict your potential tenants. Can't have 3 sets of tenants that have 2 or 3 cars each in a Fourplex, or 4 sets of tenants that have 3 or 4 cars each. It's going to get pretty congested, but if you got twice as much land, you got twice as much street space, twice as much parking in the back, off the alley, so you've got a lot more flexibility there. So, but yeah, in terms of ease of management, try and find, it's really only recently that we have found, and we're going to bring him out as well to talk about property management, that we've actually found somebody who can do a decent job of managing a single family house with a basement suite.
Yeah, the truth is at scale, if you own 20 single family houses, for example, it gets very difficult. And this because you self-manage, right?
Yeah, it's challenging.
Exactly. So, yeah, you can ask questions.
On the single family side, does the illegal basement suites compared to legal basement suites? Is any different?
It hasn't been, but of course, recently they've come out with the amnesty program that they're also ending. So it depends on how that plays out.
You're talking
Obviously,
about value, right?
Well, just if they're, like, I don't know, when it's an illegal basement suite, is there a chance that you're gonna get shut down because of
course, yeah.
complaints?
Yep.
That's more risk involved in buying that property, so you take that into account.
Well, that would be. Yeah,
Well,
you
we
could-
were talking about legal basement suite
Yeah,
in this
and
example.
you could
but-
apply the same thing to a illegal fourplex, right? A duplex that has suites in both sides. So you apply the same, and both of them can now be legalized with the amnesty program, providing the suites have been there long enough and it still fits. So, yeah, same risk scenario without those. So, but yeah, but 600 for the house in Highland Park with a legal suite, 600 is a pretty reasonable price range. Like that'll get you a pretty decent one, I think.
As an
So,
example, obviously,
yeah.
it could be elsewhere, but yeah, go ahead.
How does the zoning play into that?
Yeah, so it is a factor. Fourplexes, it depends, right? There are fourplexes on RC2 lots that are on 2 titles, right? So you could have like semi-detached on an RC2 lot and then another semi-detached beside it, right? Could be also a full fourplex, right? Some of them will be in MCG lots. It's pretty rare you'll have a single family in an MCG lot. It happens, but it's pretty rare. However, it doesn't matter that much because once you start to have a certain amount of land, like for example, we've got a project right now in Highland Park, the all RC2 lots, or we're getting them rezoned for the project we're doing, right? So there's an added benefit in terms of time to have the right zoning from the start, but as long as the parameters of the project you're doing fit in the rezoning, it's not really an end be all, right? So if you've got an RC1 lot, it's a bit more challenging because now you've got less options. You can't even do
But it's a fair point. You can't go into a house in Tuscany, for example, and think that a builder's going to ask you to put up detached. It's not going to happen. So you'd have to be specific to the neighborhoods that are already RC2 or that you're already seeing semi-detached in to be safe or being approved or likely to be approved. But yeah, you're not going to go into you're not going to go on the golf course at Willow Ridge and expect that the neighborhood is going to let you put up 2 duplexes there. So you got to be, to some degree, you got to be pretty focused on that if that's your long-term strategy, which for me, it almost always is. Like that's always I want a cash flow, but it doesn't cost that much more to buy your cash flowing property in a neighborhood that is also going to potentially have some growth. And there's some timeline in it. Like we bought our first property in the lots of 6. We did our first one probably 12 years ago, bought our house, bought the one next door, bought the one next to that, bought another one. And now we're 12 years later, now finally, and it's not zoned for it, but it's within the TOD of where the green line's going. So we know it's inevitable that that's going to happen. We didn't know whether it'd be 5 years. We were hoping that in 2012 or 13, but that adjusted to what's going to be, 10, 12, but eventually it would happen. If the market wasn't booming right now, it'd still happen. It would just be 15 years instead of 12 or 20 years, but it's still eventually going to happen. And that's where you get the big kind of extra bump in real estate that's already also increasing based on inflation and it's cash flowing the whole time too. You don't, like I say, as long as you're thinking long enough ahead, if you're, buying where you're the only house left on the street that isn't an infill or semi-detached, then the value is already embedded in it. You're already paying for that.
When that's the thing on the flip side, let's say you buy an MCG lot with a fourplex on it, right? Well, you've got an MCG lot, but you also have a property that's likely the highest and best use for that, right? And if you wanted to build higher density, you'd have to rezone that anyway, right? So you're still dealing with the same issue.
And even if it's zoned for something more, the price you have to pay for it is not worth it.
Yeah.
It's because you've now, instead of again paying 600 for it, you've had to pay 1.2 for it. So you've got to now make up for all that to tear the house down. So it's theoretically still possible, but it makes it more challenging to. So yeah, zoning is. Yeah, I mean that's obviously one of the things you need to take into consideration when you have a long-term strategy.
Any other questions? Yeah.
So one question is in terms of appreciation.
Yeah.
The other one is qualification. So
we keep everything the same. We've got two singles versus one fourplex, and we hold the property for 10, 20 years. Everything else is the same. Which one has better appreciation? That's the first question. Second is residential, buying two properties. You'd have to qualify basically on your income.
Yeah.
Pull that down and it'll probably be 5%.
No, it'd be 20 if you're looking for an investment, but yeah.
Probably, based on some rental income versus just
No.
income.
So fourplex is also residential. You also need to qualify based on income. Yeah. And both cases would be 20% down. The difference is it would be easier to buy a single family house that you're going to move into with 5% down than trying to justify buying a fourplex with 5% down. Especially if you already
actually
live in a
can't.
nicer
You have
house,
to.
right?
You can do 10% CMHC if you're planning on living in it. So that's why I say I'm not 100% sure, but I'm pretty sure no one's ever closed. But I have had younger investors buying the first house, but they're younger, eager investors, and they say, okay, well, I want to buy, but I want to be an investor, so I'd like to buy a fourplex. Can I put 10% down? So I've certainly gone through the math on a lot of. I just can't recall ever closing any, but people have looked at that because you can put that 10% down. So that would, if you're limited with if you have 120 grand and you've got decent income, but you're buying your first property and you're single and young, then maybe that would be something you actually would consider, because you could buy more real estate that way. You're leveraging 10 to 1 instead of 5 to 1. Although if you put 5% down, the same, 5% down and then moved a few years later and did it again. Yeah, I like I say, I've never seen someone close on it. So I think
trickier.
after the math, yeah.
If you want to remove the income equation, at least for the most part, and go with commercial lending, you'd have to go 5 units and above, right? But now you're trading something, is that you're buying based on the cap rate at that point. And the cap rates in Calgary are not great right now, or the 4 to 4.5 for the most part, which usually doesn't cash flow with this kind of interest rate, right? So
it does
that's
for
a whole different
wealthier
strategy,
investors
right?
who put 40 or 50% down.
It's a whole different discussion too,
yeah.
but essentially that's where that kicks in, right? Some will do even residential up to 6 units, but the short answer is 4 units and single family house, you'd be looking at residential lending. So, any other questions as well?
What about the appreciation?
Oh, sorry. Yeah, I did forget. Yeah.
I mean, appreciate nothing.
We have twice as much land with a
Well,
single
if you
family.
go, you have twice as much land, so it's gonna end up taking over, because the buildings are both gonna get older, but one, you have twice as much land, and land appreciates with everything. And we did the last presentation we did was on inflation effectively increasing everything. In terms of hard assets, yeah, real estate. That's why real estate works. You borrow money.
Before someone says, well, between this year and this year, it wasn't the case. We're talking about long term, right?
And an average. Yeah.
Exactly. Yeah.
Yeah, and it would eventually be that the value of the larger the building, when you buy more of it, that's why I hate condos. You're buying such a small portion of what you're purchasing is actually land. The rest is a building that's going down in value, and the way that manifests itself over time is the older the building gets, the higher the condo fees get. And it's at highest and best use. It's too expensive to tear down. So condos are not a good long-term investment. Again, if you would have bought a condo 15 years ago in Toronto, you would have made a ton of money on it. That still doesn't make that necessarily the best long-term investment. There are ups and downs in different years, but for the most part, yeah, long-term appreciation. The more land you have, especially if you can cash flow the same. So if these numbers, and I'd argue that you'll actually cash flow a little bit better with a single family home strategy, but even just assuming it's the same.
You would cash flow a little better.
Yeah, you don't have to give anything up to, in this case, you don't have to give anything up to own twice as much land, which is the long-term value.
So it's a combination of two factors: appreciation, more land and investments.
Yeah.
Those two things together.
Yeah, if the land goes up in value, but it's the way it really manifests and kind of increases significantly is when you can change the use of that land to its proper use. And you've got a pretty big hump to get over if you pay basically double the price per square foot for the land. So
you had a question? So you're next. Yeah, go ahead.
I was just going to, it might be a different topic, but what about single family homes having carriage houses? Because then you could get
I'll let him do this. He's the
Yeah,
Carriage
I
House
would
guy.
love to answer that
Yeah.
question because I'm fairly
I'll let
passionate
him.
in
He's
good and
he's
bad
been
ways
annoying
about
me
this.
for long before he was a
so-
realtor with these questions. So,
So I own a property with a Carriage House, but I did not build it. And I would not build one. That's the tricky part. So they're very exciting add-on to a property. They bring more rent than a basement suite, right? They're more desirable than a basement suite. It's essentially a mini house,
cost
which is
about the same
also
to
the
build?
problem why. That's also the problem is it is a mini house. They cost almost as much as building a whole house because you still need the same utilities, you still need the same pretty much furnace, hot water, all that stuff, kitchen. So right now the numbers I'm hearing is they cost 250 to 300 grand, sometimes even a bit more if you want something fancy. It's a lot of money, right? It's a lot of money and it doesn't really make sense because once you sell that property, they're not worth 250 to 300
Because
grand.
you haven't
Unless
added any
you're in a
land.
stellar neighborhood, they're worth usually half that, right? So on day one, you're already losing on resale value. So I like buying them existing because you're buying them for less than build value.
Yeah, it used to be like
Um,
when you were first looking, we were looking at the ones in Elgin or whatever,
Yeah, Mackenzie Town,
and
yeah.
Mackenzie Town, and it was like 50 or 60 grand more than a regular house. Like it was like 50. That was it.
Yeah, now they have.
Oh, now they
appreciated
have
more.
actually appreciated because rents have
You're
gone
probably
up so
around
much,
150 on the resale, extra 100 in some cases, but in either case, it's much less than build cost.
Yeah, sorry for talking about those. Because
But they are exciting. They're just expensive, right? So if you can pick them up existing,
I kind of fall back on the same thing. The reason why I didn't, I think you liked it because your wife's like, no way we're having a basement suite, but she was.
well, I
okay
should
with
add actually,
potentially-
they are very nice for house hacking. If you're not willing to have a tenant in your basement, that's definitely something to consider, right? Because you're still getting the income, you can still buy that house with 5% down, but wife acceptance factor, whichever side it is,
Yeah.
is a lot better, right? People are a lot more willing to accept a tenant in their backyard.
It's just like
that
it's
doesn't
like
share
it's like a
wall,
next door
so-
neighbor. It's not
Yeah.
really, even though it's part of your property. The reason I don't like it is usually because, especially where the numbers were before, is you'd go spend so much money, but you'd end up being 100. Like if you did a refinance on it, you might get. You're still
Half
going to
of
have
it,
to put
yeah.
at least 100, 120 grand down that you're going to have to leave in there. Well, it increases my cash flow, it pays for itself. But with 120 grand, you can go buy a single family house with a 6,000 square foot lot with
Yeah.
2 units renting, and then you own twice as much land and probably better cash flow.
We
So
ran the numbers
I-
like
yeah.
every single way we could
Yeah.
imagine. Every single time it made more sense to buy another house.
Yeah, until he got one for free once. Just like you just rolled over. I mean, I shouldn't say you put he knew every house that had been listed for years. I don't even know how it was before he was a realtor. I don't even know how he knew the stats.
There's a
I was
reason it
it's like,
became
oh, I got a
realtor,
client
so-
that's got a house. I know that house. How do you know that house? Like he hasn't listed it in 8 years, but he that's why he's the
They're
expert
hard to
in
pick
that.
up, by the way. There's not a lot of inventory. If you're interested in those, reach out to me because they're really hard to find on the market as well. Like I have a crazy way to search for them. Like there's no category for backyard suite. There's no like, it's tricky. But I found a few ways to kind of target them. So let me know. But yeah, any question?
No, I was not familiar with where is this called? Carriage House?
So that's actually part of the problem. There's about 30 different terms to classify them.
Yeah.
They're called carriage suite, laneway home, garden home,
Garage
backyard
home.
suite,
Yeah.
garage suite,
Yeah.
garden suite, coach house, laneway home. I think I said it. There's like a bunch of other ones. I'm not even kidding. Like it's close to 30 like different terms that people use.
Separate from the-
Essentially, they're dwelling that's in the backyard of the
Usually
property.
it's above the
usually.
garage. It's
In,
tough
in most
to-
cases,
yeah.
but they don't have to be. Some of them are on ground level. Most of them on top of a garage.
Edmonton has those, like the
Here too, we have them as well. But then
Yeah,
Edmonton's been
Mackenzie
much
Town, that
more
was one of
friendly
the
about it.
features. Is there's
Yeah.
lots of garage homes in
you
Mackenzie
can have
Town.
the basement suite as well and the garage
No.
as well.
So you're not allowed more than 2 units on one lot. However, the city has received recommendation from some affordability group, and they're starting to consider that. But as of right now, only 2 units is allowed. So you can't have a garage suite and a basement suite legally, right? Like you can still do it, but you can't legalize those. So, that's part of yeah, that's the downside right now.
Sorry, you had a question, right? Yeah.
And just before you ask, you can't add a suite on an existing garage in like 99% of cases. So before you get the idea, if you've got a double garage, it's almost guaranteed you have to tear down, build a new one with a suite. So.
Yeah, my question is mostly like talk about the appreciation side of things, because I really think that that is also the emotional factor that goes into like single family homes, like to drive the prices up and
Right.
other things. And I think this is like I see more the Fourplex like on the side of like you guys said, like the reserve like that wealthy or like the cash flow like most of the time. But I really think that the single family home, and also like I think another part is also the flexibility. Like if you have a Fourplex, for example, you have a single family home, and then you have a garage in the front, and like a garage in the back, or sometimes people build like later on you need to like increase your cash flow or something. Maybe you can convert to that part or do some other things, and then Fourplex is much more difficult to work on that.
Yeah.
No, it's a good point. There's not a whole lot you can do to make a Fourplex better other than renovate it.
Yeah,
like you might be able to add a garage, but that's pretty much the end of it, right? You can't add the garage suite even if you wanted to.
Yeah, yeah, it's effectively at highest and best use. Really is the So yeah, so what other questions?
Sounds good. Well, we'll wrap this up then.
Yeah.
So we'll take everyone's chairs away, and we'll move in the networking part. Yeah.